session that we're going to talk about is personally a very, very interesting session. Those of you who attended Sanjeev Sanyal's session earlier, along with Professor Chaturvedi, we touched upon the issue of internationalization of rupee. We also touched upon the issue of counter trade, and the difference between the two is what we are going to discuss. What's the difference between counter trade and internationalization of rupee? Why are these important for us? What does that have to do with security of the nation? And those are the issues that we will discuss. We'll start with Professor Sachin Chaturvedi. He has been working on this area for a very, very long time, has got deep insights. So without much ado, Professor Chaturvedi, if you can provide a background to what is counter trade, what is internationalization of rupee, and how is it going to reduce the threat of sanctions on India and reduce the cost of cross-border trade for India?
Thank you. So I think first and foremost, it is this whole fact in terms of how the de-dollarization, the internationalization of rupee, and issues that are there in our trade baskets, part of which we discussed in the previous session, are intertwined and interconnected. We need to understand the idea of counter trade and also the issues which are there in internationalization of rupee. First, if you look at the mindset that we sort of inherited post pre-1991, and that continued in the post-1991 policies as well. And I give you just one small example, just to give you some sort of hang on how internationalization of rupee is important, and the current emphasis of the government is going to take us in one direction. So in the trade policy, there is a provision which was in the trade policy of 2007. So this says that there would be a 5% rebate if you are able to earn X number of foreign exchange for the country, which was very much part of our 80s thought process of going ahead with exports, earnings as our forex-based formation. This continued for some time, and people from our neighboring countries, particularly Nepal, started complaining that if they import anything from India, and if their importer has to get the sort of advantage, then they have to first deposit in Standard Chartered Bank or Citibank. The transfer for payment goes to New York, then it comes back to Delhi, and it takes around 28 days, and almost 38 to 42% increase in the cost of transaction. G20 continuously tried, India also tried how to reduce the transaction cost, but the fundamental challenge of we completely disconnecting ourselves from our history, and that goes back to the morning session, in terms of how we enhance our clout and our influence through our currency. Even in the neighborhood, we rejected the idea, and we continued to pressurize our trade partners in Nepal and other places to get into it. One more example I give you. Every year we buy a huge power from Bhutan. Bhutan's national bank, and when I went there last year, I met the governor of, they have monetary authority, they don't have Reserve Bank of India, they have Royal Monetary Authority. So I met the governor, and the governor told me that we are every year sort of getting payment for our export of power to you, and that comes to Punjab National Bank. Punjab National Bank turns it into dollar and then makes a payment to Bank of Bhutan. Bank of Bhutan can't do anything with the dollar because 90% of their trade comes from India. So a rupee payment is to be made. So then they give $40 million to Reserve Bank of India to get the rupee payment for them. So they said that our request to RBI is to allow us to open branch of our central bank in India. SBI is having 20% stake in that. So SBI blocked them not to come to India. Whatever you require, do it through SBI. So they independently wrote to RBI to get that opened. The response was that all foreign banks, they have to have a deposit, a safe deposit as they call it, of $25 million. So any foreign branch that is to be opened here has to have $25 million. They said, where would we get $25 million from? So the matter is stuck for quite a few years now. We are trying to push it. So currency that was prevalent all across Asia at some point, Indian rupee, we ourselves have made our own policies in such a manner that the colonial mindset has completely disconnected Indian rupee with that. The effort that we made with rupee ruble trade was to honor that, and our idea was to see if currency transactions can be reduced. Russia is dead committed for de-dollarization, so they were very happy. The trouble for them was that our imports multiplied in terms of what we were importing from them, and they did not know what to do about this. So the idea in terms of what advantage we are getting out of rupee payments in currency exchange, or in terms of making other countries get access to rupee and then get adequate advantages in our policy regime, these are two important questions, and that's where the whole link comes in terms of we identifying the two distinctions that you're talking about. The story becomes little more complicated if you see our official position on capital account convertibility. The World Bank IMF pressure you are very well aware of, and I would not get into that debate, that would take a long time. But what Reserve Bank of India has done is in terms of very gradual reduction in capital outflow that has de facto made rupee convertible. And there are four very clear advantages of this. First and foremost, that the rupee cloud has multiplied. The fact that we have eased investment in India, that has helped countries like Russia, where they are accumulating rupees like this and they do not know what to do with that. So recently, Reserve Bank has opened up vistas for their investment in other instruments for their investment, and that has given some sort of relief for Russia. So that has happened. The third is like Taka Rupee sort of arrangement which is coming up. The Nepal India arrangement I mentioned, Bhutan India I mentioned. So Sri Lanka fortunately this year has joined the bandwagon. So what you are now trying to see is this huge distinction that we are having. Instead of rupee ruble trade that became a sort of counter block, we are now getting into expansion of our own rupee based payment architecture. This is happening with, as I said, four clear advantages. First and foremost is capital outflow is not restrictive anymore. Second, which is very clear, is in terms of financing of our exports, and now outbound foreign direct investment has also multiplied. So this is also providing additional support to our firms which are interested in that. The third, which is coming up with new technologies, is our Rupee card, our experiment with CBDC, which is giving a huge impetus to this adoption and diffusion. Fourth and last is its connect with inflation. And this again is very relevant from what we discussed in the morning session, is in terms of the endogeneity in our decision making process. So Reserve Bank of India exercising full authority in terms of how much rupee reserve we need vis-a-vis the dollar, how much is our reserve in terms of gold, and to what extent we can decide in terms of interest rates and inflation, so that the rupee value is determined adequately well in advance in terms of stability. People were crying foul in terms of rupee depreciation, but as the discussion paper from RBI makes it absolutely clear, the percentage variation is not more than 18%, while the international average for emerging market economies is 33%. So our fluctuation at times has gone very far, but hasn't gone beyond our capability to manage. So larger issues within internationalization of rupee are connected with macroeconomic variables, capital account convertibility issues, and our international trade. In the previous session, we discussed about trade, how trade is expanding, how India's international participation in trade is growing, our share is growing, our exports and imports both are expanding, and our ability to have outbound investment has further added value. So these four issues are extremely important for us to see how internationalization of rupee would happen. One last thing that I want to mention is in terms of technology. I already mentioned that CBDC and our payments are sort of giving the ecosystem that is needed, but much more important is our ability to create counter to SWIFT. This is something which is great achievement for, I would say, Reserve Bank of India and their IT system for creating something like RTGS, which is 24/7 now. This has made life extremely easy for people within the country. The next phase, and in next 3 months, they are targeting to connect all RTGS systems of all the 300 Indian bank branches which are outside India. So those bank branches, say Bank of Baroda in Accra, Bank of Baroda in Brussels, both would be connected to headquarters of Bank of Baroda in India through RTGS system. We don't have to depend on SWIFT. As all of you may be aware, SWIFT is an international arrangement for transfer of money from one country to another, controlled by, it's supposed to be global public good, but is controlled by United States. It got suspended for Venezuela, for Russia, so whoever is against US have used them. Even we had trouble with making payments for our imports from Iran and from Russia. So the issue of internationalization of rupee, as I said, is connected with this huge ecosystem. Any currency and its survival and its wider adoption would be dependent on these multiple factors that are there. Thank you.
And no, there was one more question, Professor, is what is counter trade and why is that different from internationalization of rupee, or does internationalization of rupee solve counter trade?
Counter trade is a very traditional instrument which was trying to create your ability to trade with countries with which foreign exchange is not something which is greatly preferred. And I give example of India, Russia. Suppose if you have to import from country X where there is no willingness to have US dollar, we also don't have willingness. So we would end up with what is called as the barter trade. So we give you goods and you give us goods. That is possible where both the countries have perfect complementarity in terms of what is needed and what is demanded, what is supplied and what is demanded. This is possible only to some extent in your economic growth. In a world where 72% of the global trade is in value chains, 72% of the world trade is in parts and components. It is not in final goods. People cry about India-China trade deficit, which is now crossing $100 billion already. The finished products share in our imports from China, which was at 36% in 2010, now it has come down to 12%. Finished products. Parts and components have increased. So barter trade is possible only when you are making things which are finally demanded. India has reached at a stage of economic development where fortunately this government in last 10 years has given a huge impetus to manufacturing. So manufacturing has emerged very well in the country and is likely to go up further. In such situation, your policy on our currency, your policy on our international trade, your position in terms of payment architectures that are there have to match your vision for the future. And in that context, the idea of barter system would not work. Only thing that would work, and as I said in my third point earlier, digitalization of Indian rupee would be the only way forward. 38 countries have accepted Rupee card, and we are expecting that with CBDC going beyond merchant pilot now would be able to bring in foreign countries' participation in the governance of Indian rupee at the global level.
Thank you, Professor. I think that's very, very helpful to understand. Just for the audience, CBDC stands for Central Bank Digital Currency, or what we popularly call as the digital rupee, which is based on blockchain technology. Moving to you, Ambassador Bhattacharya, you have again been on the ring side of some of the negotiations that was happening. And as Professor Chaturvedi explained, there is significant economic leakage due to cross-border trade happening because we are doing it in third-party currency, to the silliness that he mentioned where we convert rupee to dollar and dollar back into rupee with no particular gain, and that's very burdensome for any economy. It also adds to the cost of trade, thereby making exports uncompetitive. Moreover, the trade happens under the potential threat of sanctions. Again, what Professor Chaturvedi mentioned, where funds held in a third country can get frozen. You have seen that happening with Russia. You have seen that happening with many other countries. What are the challenges in cross-border counter trade, and what is the issue of internationalization of rupee? How does internationalization of rupee strengthen India's trade and security? And what has been the role of diplomats in this particular issue?
Thank you, and thanks for inviting us to this very interesting theme, which is really going to shape the future. I think it's very important to recognize at the outset that everything is not about economics. There's a lot of politics, and power politics in particular, that we have to reckon with. We see on the one hand that the geoeconomics has shifted its gravity towards the Asian continent from around the Atlantic, but the geopolitics and geostrategy has not yet kept pace with that change in geoeconomics. So that shift brings about, or that desire for that other shift brings about a change of perception or aspiration amongst the countries that are emerging. Sachin, you have to leave, right? Yeah. Okay. The second big change that has come about is that multilateralism is on a very weak wicket. Not only in terms of the political security platform which the UN does, but also in terms of what the WTO or the World Bank or the IMF were trying to do. And therefore there is a move towards multipolarity, global south, plurilateral arrangements. The third shift that has also happened at the same time, and India has been central to all of these, is the move towards globalization, in which there is much more trade, financial flows, and also we find that people and countries are becoming more connected through the value and supply chains. And what this change implies is that the old order is no longer good. So the old order being the one which is dominated by the Bretton Woods institutions, the supremacy of the dollar becoming almost like the gold standard of the modern age. That is no longer good. And we saw the changes, and Sachin also mentioned how it happened in many phases. For instance, the reserve currency of the reserves of central banks over a period of time changed from gold to dollar to basket of currencies, and the share of other currencies other than the dollar went up. And similarly, for other countries, their baskets also began to change. Now, within all this environment, we find that India is the country which is not only the fastest growing major economy, it's the fifth largest at the moment, with the potential to become the third largest in the next half of the century, and probably even the second largest before the next century comes about. We find that we are also very, very deeply connected in the globalized world, and therefore there is an aspiration and need for our financials to be more interconnected in the global community and in the global financial structure. And therefore, I think the question of the rupee becomes so important as to what it is going to do in the future. What we also see is that with the loosening of the investment criteria into the country, us becoming striving to become more of a manufacturing hub, in addition to the earlier thrust in services, there is significant investments that are coming into India from overseas, which are now looking at higher returns, the markets not just in India but as part of the global world. And so that again means that there is a certain currency that is now developed for our rupee, which needs to go out. The third factor that I think we also need to figure out is how do we go about it. And what we've done essentially is to have an incremental process. One is that we try to do a targeted approach. So Sachin had mentioned earlier about how we went about in SARC, how we had the earlier rupee arrangement with the Russians. We then worked on this with the BRICS countries, and as you're probably aware, about 28 countries have been offered rupee trade arrangements. And that means that since barter trade is not the most practical or optimal solution, you need certain counter trade valuations that you can then leverage for your economic development. Of these, I think the significant partners that have been realized outside the SARC region would be the United Arab Emirates, Indonesia, and France, one of the few OECD members that have bought into some part of this transaction. Because this is partly in terms of rupee trade, partly in terms of the settlements mechanism. The settlement mechanism is extremely important because unless you can settle accounts, it becomes extremely difficult for individual operators, companies, to actually work out on this particular function. And so it happens A, on the investment front, and B, on the services front. Because when you set up correspondent banks, and that's one of the things that has been done between India and other countries, is that you can actually have a balance that is available in the other country, which can then be offset for the requirements that people of that country might have for relatively smaller amounts in tourism, in education, for medical purposes. It's an ongoing project, but I think it's acquired greater urgency and it's acquired greater purposeness with the digitalization of large parts of the global financial system. It requires a new system, and I think there are a number of countries that are trying to get into this game. China is a very active participant in trying to make the renminbi more of an international currency. When we do projects overseas, for instance, many of them are now designated in rupees, and therefore that helps us offset the kind of flows that come from within the country. So it's an expanding network through which you use both economics and politics to give leverage to your own national priorities, national development and growth, and work in a globalized world. And the rupee is becoming an instrument in that.
I think that's an amazing insight that you have provided on what are the different forces that are at play and the need for internationalization of rupee. So I'll move to Vaibhav. We've got the 60,000 feet view of why internationalization of rupee is needed, what is being done. But on the ground, we have mentioned that MSMEs are the backbone of exports. MSMEs are the one who are going to push things out. What are the challenges being faced by small traders on the ground due to the dollar-euro denominated trade? How does counter trade and, more importantly, internationalization of rupee help the small traders? And what are the mechanisms on the ground for enabling internationalization of rupee? What do you see on a day-to-day basis, given that you are a banker and you do that for a living?
Thank you, sir. So, before I talk about challenges right off the bat, I would like to reiterate what sir has already said. If we are planning to become third or fourth largest economy and we don't have our own resilient currency, then these two statements don't make sense together, right? So, without, it is not even a matter of discussion that our currency needs to be stronger to withstand shocks, right? United States is our partner, Russia is our partner, and pretty much because of our diplomacy, our sound moral compass, everybody in the world is our partner, right? But in order for that to translate into something on a very solid basis, that okay, this is my currency should be appreciated so that while it reduces inflation on my home front, at the same time, people or the central banks of other countries should feel comfortable in holding my currency to protect themselves also from the inflation. So only when rupee goes from point A to point B and back to point C via a proper trade mechanism, then the true internationalization of the rupee basically happens. In order to achieve this, the grassroots work has to start, as Sir has aptly put it. So, for the lack of a better word, I am going to use. So, there are some neighboring countries or some troubled countries where there was an immediate need to find out an alternative way to enable smooth trade. So, this is where we have started, which is possibly the best start we can have, and it's a slow growing process. It has to evolve, right? Because at the end of the day, it's a regulated work. It's not that today I am sending rupees to someone and that matter is sorted. No. In international trade, there are documents, compliances which are governed by RBI, customs, DGFT, and so on and so forth. So, coming to why I am highlighting those challenges or the importance of these requirements is that while we have to definitely approach for internationalization of rupee, we also have to make sure that people happily embrace it. It cannot happen that okay, the government wants to do this. It's definitely not strategic and economical sense to have a stronger currency or a bilateral currency with any other country. But people on the ground should be able to do trade in it. Now this is where the problem right now is there. I will take an example of an importer in India. He wants to import, let's say, from a country which is not even US. Let's say I will take UAE. Right? So a person in UAE who is selling to an importer in India, he should be either willing to accept rupees, right? Because trade is a marriage of two parties, right? There has to be commercial understanding between the two parties to make the trade happen. If only I want to do it, but that party is saying that you are just transmitting my risk of conversion, your risk of conversion to me. You are now paying in rupees, but me, I am sitting in Dubai, I can either work in AD or in dollars. What will I do of rupees? I will immediately convert them into dollars. And if I do that, then the process gets defeated. Because then eventually rupees is getting sold and dollars or AD are getting bought. But the end goal is that the rupee should be again used by that country or some other country to bring back, into country. That's the entire crux of the problem. And why? So I will again make one more point in that. So there are 2 or 3 ways in which a trade could happen. Either one person is unhappy, one person is happy, and there is probably bargaining power. So okay, that trade is happy, right? We can take ruble rupee trade for that matter. Second is that both the persons are happy and are willing to listen to each other's terms. So this is where the trade becomes sustainable. And for that to happen, the seller overseas should be comfortable in receiving those rupees and should be comfortable in holding them as rupees only. Right now, these are the challenges because as an importer, I will happily pay in rupees, because I don't have to worry about forex risk. But my counterparty is not, that keen to handle rupees. So we have to answer that, and probably in the course of our discussion, we are going to converse on that. The second part is we are value-seeking country. We are value-seeking individuals. So wherever there is a profit, we will definitely look into it. So whenever, if I switch hats, I become an exporter, then I will not like to receive rupees. I would like to receive dollars, right? Because dollar commands a premium over rupee, right? There is 2 to 3% of currency exchange rate benefit which I can get if I am receiving dollars 3 months or 6 months down the line. Whereas if I lock my exports in rupees, then probably there is no additional value over it. So in India, everybody is smart, everybody knows how to do their business, and they will always do what is best for them. And like I said, trade happens when both the parties are on the same page for the trade to be sustainable. And this is where the main problem lies. On the counter trade or the barter trade, I think I would agree with Sir, because this is probably an old narrative, and also please pardon me, but as per my understanding, this is also a documentarily very cumbersome process. It's It's not very easy to take approvals that okay, we are going to get X number of goods and we are going to sell Y number of goods and please exempt us from these and these and these formalities. They are going to actually, make sure that this does not happen on a regular basis or even on an exceptional basis. And to be fair, I think that probably makes sense as we want to evolve into something on a greater level. Now, the internationalization part probably can help us in replacing that counter trade thought process by making it a rupee based thought process. That okay, I am giving you rupee, I will also buy back, I will sell you and you can give me back those rupees. So that thought process is there. Government has basically laid out the infrastructure also for that. It is only the matter of the traders to come along and join the bandwagon. I will also like to add one more point, which probably most of you would be aware. In the past few years, both DGFT and RBI have done extremely well in enabling these tools which are a result of the strategic vision of the government. So on the custom side, now EDPMS or IDPMS have been fully implemented, which reduces the paperwork and the customs hassle. So it makes global trade easy. So that part has been taken care of, the global trade part, because the documentary part has been made very, very easy. The second part is on the rupee enablization, which has also been there since the ages. Now because of government's impetus, so it's again come out with the front. And the third part is probably one of the most indigenous product which we have developed is the UPI or RTGS system. So we have payment mechanisms, we have banking enablement, and we have also digitally more advanced customs at airport. So what it effectively means is now people need to be made more aware, and how we can probably push it is probably we can discuss this further also. But at this point in time, the main challenge is between the two parties, there is not enough motivation to switch from an age-old system of dollar, which has 100 years of domination, probably more, to shift to rupee. Both the parties. When I am an exporter, I don't want to shift to rupee. When I am an importer, I want to shift to rupee, but that party does not want to shift to rupee. So these are the main challenges.
Yeah, no, thank you. But just to clarify, dollar came into being only after World War II, when Britain was finished off, and the rivalry between Britain and US was also pretty fierce on the currency side. But I'll come back to you with one more question, given that you're a banker. RBI came out with this special rupee was-through account, SRVA, and was supposed to help in internationalization of rupee. If you could just help us understand what is SRVA and how does it help in internationalization of rupee?
Sure. So there is a concept called was-through account. Was-through account is basically an account of an offshore bank in India with an Indian bank. Just like we send dollars overseas, then we have a nostro account relationship. So basically a nostro account is the nostro account of an overseas bank in India. It is used to make or release payments in rupees. SRVA was an additional provision made by RBI. Basically it evolved out of a need, right? We were importing a lot of Russian oil, right? By even very conservative estimates, although I don't have those statistics with me, but definitely on a monthly basis, $1 to $2 billion worth of, around 10 to 15,000 crore worth of Russian crude probably was coming to us, and we were giving them in rupees, but we were only parking those rupees in their was-through account, which is in India, right? So that rupee has not been converted to the best of my knowledge, right? And in order to ensure that that rupee does not get converted into dollar, otherwise it lead to inflation, right? The dollar rupee exchange rate rupee will depreciate against dollar, it will have inflationary impact and so on and so forth. So RBI, in order to calibrate the impact of those accumulated rupees, which technically are of an overseas entity, they allowed them to open an SRV accounts, specialized rupee was-through accounts, which gives them additional flexibility to use those funds into any number of other activities. So they can probably invest back in India in markets, in bonds, in government securities, and also to again facilitate exports on a very seamless basis. So idea is that they have given the incentive to the other party, which is based out of, let's say if I talk about Russia for example, then the Russian bank probably can facilitate imports from India in a more easy way by these SRV accounts. So that is the basic premise of SRV account and was-through account. It gives the overseas party flexibility to invest those rupees back in India if we are not able to export that much back to that country.
Thank you. Thanks, Vaibhav. Moving back to you, Ambassador. You have also been watching what's happening on in the BRICS side, where they are getting into an arrangement for trading using local currency. Does that help in internationalization of rupee, or does that help in internationalization of yuan? How does the BRICS agreements play with the internationalization of rupee?
So I think what came up in the BRICS was again part of that dichotomy between, I think it's there, right? Yeah, that dichotomy between the economic rise of BRICS countries and the lack of rise of a political system. And so, since there was a demand for greater global role in global governance, financial structures, and we were engaged in discussions with IMF and the World Bank, and we did get some additional voting rights in both those institutions, but not adequate or not commensurate with what we would actually have desired. That BRICS actually started discussing this issue within themselves, because the original BRICS of 5 countries was a fairly large entity within themselves. And in the Fortaleza summit in Brazil in 2014, the declaration came up with 2 important conclusions. The first was that they decided that they would trade in what was termed as local currencies. And that would mean that the currencies of these 5 BRICS nations. And the second decision was about the establishment of the new development bank, or what was also known as the BRICS Bank. And the import of that was that the BRICS Bank does projects not only in the BRICS countries, but also in other countries. In other words, you would have the process of facilitation of finances to a larger group of countries in your geographic area, which were developing for itself. Now, when this was done, it was also realized that unless there is a certain volume of transaction between the intra-BRICS transactions, either in trade or in financial transactions, it is very difficult to implement. The second complication of that was that how do you have a settlement mechanism? Because in many of these BRICS countries, the trade was not equally balanced. And so there were certain countries who would have an advantage, and so you would have the kind of situation where you would have a huge number of rupees accumulating in the Russian account over here. And this is not the first time it's happened. We've had rupee-ruble trade in the past. We've had rupee accounts for the Iranians, who are now part of BRICS, which had also been accumulating at some point in time. So the settlement mechanism for BRICS was also an extremely important element. In between, there were also discussions for a BRICS currency. Is that better? Yeah. In between, there was also a request or discussions for a BRICS currency. Now, the BRICS currency really did not gain much traction in the discussions, because the original 5 were a rather disparate group of economies. There was a similar experiment, as you know. The European Union brought about a great degree of policy integration, and they also introduced a common currency, the euro, which was introduced about 20 odd years ago. But even in that, as you would recall, there were a number of countries that stayed out of the euro. And it was an extremely difficult and cumbersome process, even for the Europeans, who are contiguous countries with a large volume of internal trade amongst them. In fact, estimates of their internal trade go up to about 3 trillion euros. So it's a very, very large amount, and therefore they stand to gain a lot. But it was extremely difficult having unified monetary policy, and the European Central Bank, based out of Frankfurt, had great difficulty. So there was no such mechanism within the BRICS framework to have this currency. So that discussion, although it still remains in the academic stratosphere, has not really made it to the negotiating table. But what has made progress is on the local currency, the settlements mechanism, and in the recent Johannesburg meeting last year, in the summit, they actually agreed on the creation of a BRICS payments task force. Now this is exactly what they're trying to do, because as you know, in the international context, the final capital account settlements are done between the central banks through the Bank of International Settlements in Basel in Switzerland. And so how do we evolve a similar mechanism? As Sachin had said, that I think in some ways when the extension of or the transactions outside of SWIFT begin to happen, that's going to happen particularly if you're going to be doing local currency transactions. So it could be denominated in rupees if they're with India, in renminbi if they're done with the Chinese, and so on. But then at the end of the day, you would need that settlement mechanism, and the BRICS task force is currently engaged in that. Till now, because of the relatively low volume of trade between the partners, between the earlier partners, the kind of detail that has gone into that is still at a very rudimentary level. But the introduction of the new members, and there are 6 who were admitted, 2 of them have not yet joined, that is Saudi and Argentina has refused now. But with them, particularly with the UAE and with Iran, there are huge prospects. With UAE, as you know, we already have a rupee trade arrangement already in effect, which is being implemented. With Iran, which had been outside of the international financial system ever since sanctions came in, could this open a new window? Of course, that might have implications regarding potential sanctions on those who are dealing with the Iranians, but that's another issue. But it does open up a mechanism through which you can actually start trading. And since the global dynamics and geopolitics is constantly in churn, we can't always predict what the future is going to be. So in some ways, the BRICS experiment is trying to put mechanisms in place so that you can trade, integrating trade and investment together through the NDB, the New Development Bank, and also to find a settlements mechanism. These discussions are currently on, but it could be a way forward. So one caveat over here is that it is not necessarily internationalization of the rupee or rupee alone, but it would be rupee along with other currencies of relatively rapidly growing developing economies.
No, thank you. That clarifies quite a bit as to what's going on, because we typically don't have visibility in public information. One of my concerns in that BRICS arrangement was that possibly China may end up dominating, and therefore yuan may end up dominating, because clearly they're the largest trading partner of most other economies in the world, including India, where, as Professor Sachin Chaturvedi said, we have crossed $110 billion of imports from China into India. So is that a realistic fear?
So I think, the level of integration that developing economies have in the globalized world is going to be a factor, obviously. And we've seen that China, which had commenced its reforms and opening up process through a manufacturing and export-led strategy, had integrated into global trade markets very, very competently. And particularly in the decades after 2001, when it became a member of the WTO, it was able to expand its global share in trade very, very rapidly. And it also coincided in a sense with the growth of the Chinese economy, which grew from roughly about 3% to 18% or thereabouts of the share of the global GDP. So that is always going to be a very strong presence. So today we have a very different world. The very different world is that there is a relative slowdown in the growth levels of the OECD countries, and China herself is slowing down. It's growing at a much slower level, so there's deceleration over there. The second is that the advantage that China had in terms of utilizing exports to push its growth potential is probably going to be much less, because with the failure, I'm being very rapid over here, of the WTO, we do see that there are protectionist walls coming about, and plurilateral arrangements or regional arrangements are replacing the multilateral trading arrangements. So the growth in the future will probably depend more on what was said about the supply chains, intermediate goods, but the share of that particular export-led growth might not have the same kind of vector as it did in the past. So for us, this is a great concern, because we are entering our accelerated growth phase at a time when these two headwinds are coming against us. And since China has the natural advantage in terms of its size and momentum, will that become a major force? Let us not again forget, and that's why I keep saying that we need to always look at economics and politics together, that with the Russians, once we started rebuying Russian hydrocarbons, we ran up an account of about $50 billion with them, and it was very tough for the Russians to utilize those funds, and so we made some concessions. But the Russians at one point of time said, at least some of these transactions, for instance, some of the shipping costs were actually on Chinese ships, and they said, why don't you pay that in renminbi? Or so there is a natural tendency, and politics is not divorced from it. And China is a big dragon in the room. So we have to be conscious of that, and we are conscious of that as the days go ahead. But I think what there is great conviction is that in the days to come, particularly if our manufacturing strategy picks up momentum, if we can actually leverage the demographic dividend that we have and have them educated and skilled sufficiently, and if we can use the vector of technology and innovation so that there is greater incentive for new technologies and new industry to come and invest more or invest in India, and not look at India merely as a China plus strategy, these figures could look a little different in the days ahead. After all, what we have found is that technology enables us to leapfrog the stages of development. So there's no reason to believe that the kind of growth that China had from 1978 onwards, particularly when they were roughly at the same level of GDP and per capita income as ours, that need not be reversed. So I am reasonably optimistic that while if we are conscious of these caveats, we can look at the oppression of the renminbi.
I like the choice of words you had, and my point is, if US was part of BRICS, there would be no other currency than the dollar in the BRICS. So we get your message, and thank you so much for putting it across so articulately. Thank you. Moving to Vaibhav, again, from the banking perspective, what are the initiatives of the Indian banks to really push for internationalization of rupee? So the government is doing a set of stuff, the diplomats of the government are doing a set of things, the MSMEs are doing a set of things. What are the banks doing?
I will start my response with taking an analogy on a lighter note. It's strictly for humor purpose. See, international trade, two mediums are very important. One is customs, another one is banking. Through customs, goods finally come into the country, and through banks, money finally comes and goes from the country. In very basic sense of the word, both of us are like gatekeepers, right? That means if your documents are all clear, so you're good to go, whether it is money. Even the customs guy will say, okay, these are the goods, these are the descriptions, it matches with the descriptions, okay sir, goods are clear to go. Right? So at the end of the day, we are gatekeepers. Will a customs guy, tell a customer, for shipment this big, you should not take air route, you should take sea route. That will make more sense for you, it will be cheaper. No, it will not make sense because it has to be done by an air route, it will be faster way, it's a smaller payload. Similarly, on the bank side also, from an enablement perspective, each and everything is there. Like I mentioned earlier, there are Vostro accounts, there are SRB accounts are also being discussed and negotiated by different banks in different phases actually. It's a slightly lengthy long-term process, but nevertheless, the work is happening. But at the end of the day, the analogy which I was trying to make is that banks are probably just the conduit of executing the vision of government and probably RBI through the government. Nothing more, nothing less. And I will take one more analogy to explain why this requires some kind of a policy or government intervention in case we want to slowly and gradually build it over this. We can take an example of, let's say, a metro project or a railroad project. Government spends heavily on this, finally the revenue from the metro project is what goes train ticket charges. No, that is not how the financial feasibility of a metro project is evaluated. The kind of economic expansion happens because if you construct a rail line or a roadways from that point to that point, economic activity increases, the livelihood of people increases, people earn more taxation, more real estate prices, each and everything goes to the government, and that is why government invest in these projects, because these are nation building importance. Not a single private player will be able to foresee this, because at the end of the day the taxes are not going to help, right? Similarly, this is more of a nation building project, I would say, rather than just having a small time economic benefit of payoffs. So it needs to be taken in that way that person sitting on this side and person sitting on that side both see value in undertaking transaction through this route as compared to the route which has been there for decades. Right? Unless both the person don't see that value, it will not happen. So the keyword here is government, although I am not a expert on these things, but I understand this is a very ambitious project. And like I said, if you want to go from 5th to 4th to 3rd largest economy, the basic infrastructure is there, but we need to further build on it by picking smaller players into the main fold. For example, to most of you would be aware that government gives lots of incentives to exporters. They have even enabled some process-driven things, like earlier there was duty drawback thing, which was again documentary cumbersome. Now it's simple, zero GST in most of the things. So people are happy when they are exporting. Even on the borrowing side, government has enabled banks that they can give them suspension of basically a discount of 2 to 3% on their borrowing rates if they are doing exports. Right? So this is what is enticing the final trader to actually indulge in that activity of exports. Similarly, now we are going on an extension that you exports in rupees or you imports in rupees. Then when it comes to import, then the people here are incentivized, but probably the other part, the point which is outside the Indian geography, that person also needs to be incentivized. It can be through policy, diplomacy, or n number of things. Again, not the expert there, but at the end of the day, the other person needs to hear what this importer guy is saying. Right? Unless it's a need-based thing. So, or need-based things, it's okay, right? For troubled nations and everything. But I'm talking about a generalized thing. Similarly, for exporters, we are already giving lots of incentives between for rupee exports and dollar exports. But probably we can see some more gradual, stratification. So people are more inclined to receive money in rupees rather than receiving in dollars. And this is how slowly and steadily the ecosystem, as Jaijit said, the ecosystem will build, and that ecosystem will again not be dependent on some opportunity-based or a need-based things. For example, right now the trades between India and Russia are flourishing, or maybe a couple of other countries. But this was a tipping point which made us to think in that direction. But now we have already thought about that direction. So slowly and steadily, we have to break this vicious circle, and obviously breaking that vicious circle requires either a lot of pressure from outside, so the vicious circle turns into just a point, or we have to break this vicious circle from inside. So these are a couple of approaches probably through which we collective, as an Indian set of people can actually work about it. We are value seeking people, so wherever we will see value, we will go in that direction. So that's the crux of it. And banks, whether it is banks or customs or any other regulatory body or semi-regulatory body, they are fully available to serve in this direction in which our government or we as a nation want to go.
Thank you, Vaibhav. So you mentioned about incentivizing the exporters, you mentioned about incentivizing the importers in the other country, but I also see a problem with the bank's own business model, because when you're dealing with rupee and not dealing with any other currency as an authorized dealer, you also miss out on fee-based revenue. So what should the government do to incentivize the banks?
That's a trick question. So that's a fair point. If typically a bank is not dealing in foreign exchange, then they are missing on that foreign exchange income. Not that banks are, but just so you know, first I will answer what is the existing process. RBI is already ready a lot of prudential norms to cap the maximum commission a bank can charge, which is published on the websites also, that this is the maximum minimum rates which we can charge. So gone are the days when people could charge 13%, 10% or 15% depending on what is your need and what is my requirement. And second, coming back to the original question, banks, and this is, I'm very confident that this is true for all the banks. Banks work on three framework. One is the regulatory framework, which comes to them through government or RBI, which is the apex body. Then banks have to serve the entire nation. So, and in order to uphold that RBI guideline to every last corner of that bank. So when I say last corner, we have branches almost in every place of the country, and different people are employees of the bank, which may or may not understand those guidelines in the very same way in which probably the regulator wants us to influence. So then comes the operational framework of the bank. So operational framework of the bank basically may make sure that the SOPs of handling bank's business are transmitted even to the last mile or the last person which is on the roll of the bank. And then there comes the commercial framework. So I don't have any hesitance to admit that at the end of the day, banks are, whether they are public or private or semi-owned organizations, they have a responsibility to ensure that they remain a going concern, and for that to happen, they have to generate value for their shareholders and stakeholders, and even for society. At the end of the day, what I am trying to say is that banks will definitely end up making the processing fees or the charges which they are supposed to make, or they are entitled to make. But at the same time, it definitely will not be coming as a hindrance in implementing that, because both the things go vice versa. Any critical important policy of the government, banks will play an important part. That has been proven time and time again, and also in a very transparent way, rather than through a nodal body. Banks can be a much better way of transmitting the impact of a policy. And similarly, if banks are required, and then so is the commercial existence of the bank. Because if the banks will not survive, then the entire nation building exercise, that okay, the bank is not earning money, then how they are going to, where will you place your fixed deposits, or where will the banks will get that kind of a capital adequacy to lend back to the prospective borrowers. So I don't think the commercial framework is that big of a challenge. It's just a change of mindset, which will automatically come in once the demand comes in. Once the demand is there, where instead of just a need-based rate, that okay, I need this, you are in dire straits, let's do this. No, once there is a genuine need, then these things will automatically fall in place. To quote someone, life finds a way, and for Indian businessmen, business will always find its way. The path of least resistance can always be found out. We as an Indians are champions in that, I would say.
Right, thank you, Vaibhav. Before we open the panel to the Q&A, Ambassador Bhattacharya, as a last thought from your side, how does internationalization of rupee help the ordinary Indian? where do they get benefit when we internationalize rupee? How does their life change?
So, I think the Indians have experienced a lot of trial when they try to do business overseas, because the level of trust is always, considered to be a premium. And so there are many challenges. And that's not just in terms of business, even an Indian tourist or an Indian student finds difficulties overseas. One of the things that India has been trying to do, and I just wanted to cite the example of a very recent FTA, or economic partnership agreement that we signed with a group of 4 small European countries called the EFTA, the European Free Trade Arrangement, which is with Switzerland, Liechtenstein, Iceland and Norway. Now this is a negotiation which has been almost as old as our FTA negotiations with the European Union. It's been on for about 16 years and it was stuck, and there seemed to be no matching of minds. And there were just 2 things that finally clinched the deal, because obviously in any negotiation process, both sides have to leave the table with something that they've gained. It was obvious that when you are dealing with such differences between the economies, it was difficult to find that matching, because they wanted as close to 100% coverage for the tariff reductions, and we wanted to have as much as possible on many of our mobility issues, our services issues. And so the trick finally that was clinched was that the Europeans, the 4 countries of EFTA, they agreed to a certain benchmark investment level in India, and also to provide certain amount of jobs within that particular investment level. And the second thing that they did was that they would facilitate the mobility of Indians. So I think as the nation grows, you find new ways and you find new options that are to be created. The job of any negotiator is to create those options, and when we have to negotiate overseas on whatever issue it is, we try and create new options that are going to make sense to them. So the internationalization of the rupee will be yet another option. I, as ambassador of India in Switzerland, dealing with an extremely conservative financial system that the Swiss have, had a really difficult time in trying to convince them that the UPI may be used by them. But the real reason why they didn't want it was because the credit card network, which has a stranglehold in that economy, was something that was not accepting this new intrusion. If you look at the way the dollar grew, and I think it's interesting to look at that, is that it was not only because the British were a fading power and their pound was losing its velocity, but the Americans at the end of the Second World War actually came up with a huge Marshall Plan in Europe. And when they did that, they won votaries of the European continent, which included for the US dollar, the acceptance of the US dollar. In some ways, when China launched its BRI, the Belt and Road Initiative, which was largely in the developing world, but also in parts of Europe, they were trying the same kind of approach to get an entree into the world of finance and acceptance for their kind of way of looking at things. So today's world, as I keep saying, is really the world of transformation. And in this world of transformation, everything is about to change. And it's not simply the technology that is changing, but the rules that you follow are going to be changing. And so if we miss out the boat this time, and we don't get on to the table for negotiations for expanding the scope of the rupee, and I don't think it should simply be just the rupee, because we truly believe in multipolarity in the global south, and we believe in a certain democracy that happens amongst the nations across. So we will want to see a greater voice for new currencies of the developing world. of course, India with its rupee should get its due weightage, of course. And I think that's going to change the way the rest of the world will look at India. The way they will do business with India, the way they will treat our people when we visit them or when they come to visit us. So I think that's just an instance of the changes that are happening, but we shouldn't miss out on this one.
Thank you so much. So now we open to questions from the audience here. If there are any questions, Rajiv?
Perspectives and definitely a lot to introspect and also look at the carving out the pathway for the journey ahead. My piece is around any learnings which India needs to do or not to do from China's experience of internationalization of their currency, which obviously the world has known that where it has gone, but any insights around that which we need to leverage from as we look at this?
I think we in India are not hungry enough. We need to be way more hungry. For a very long period of time, primarily our industry and trade sector was largely content with the very large Indian market, and it's a pity because the world was bigger than India at that time. If we had expanded in the global network the way the Chinese had, perhaps the kind of efficiencies that we would have had in our economy would have been much greater. Perhaps the level of integration that we would have had in our trading systems would have been much more, much higher. I think at a certain level, and this is, it's well known and documented, and there's sufficient data on this. We ourselves have become hugely dependent on the Chinese to such an extent with the very large Indian market, and it's a pity because the world was bigger than India at that time. If we had expanded in the global network the way the Chinese had, perhaps the kind of efficiencies that we would have had in our economy would have been much greater. Perhaps the level of integration that we would have had in our trading systems would have been much more, much higher. I think at a certain level, and this is, it's well known and documented, and there's sufficient data on this. We ourselves have become hugely dependent on the Chinese to such an extent that very large sections of our MSMEs have ceded way to the Chinese, because the Chinese expansion was built on scale, and therefore economies of scale that come about because of that. And secondly, they believed that they had to get into the market. And once you have market entry, market share became their dogma. So if we have Indian companies, and let me tell you that there are Indian companies who do that, and they do it extremely successfully and competently, including in markets where they compete with the Chinese, we will be in a much better ground. So I think on the economics part, there is some lessons to be drawn from the Chinese. Having spent more than a decade in China, I would not for a moment wish to be Chinese. I'm much happier being an Indian because of the way we are, the way we live. So I think that civilizational ethos that we have, and I think there is a certain resurgence of that civilizational ethos, and largely because I think we are now growing once again. That confidence and looking back into that civilizational ethos is going to be extremely important. And I see that not as a sense of pride, but merely as a foundation that serves as a confidence that we've been around for the last 5,000, 7,000, whatever, and we shall be around for the next 5,000, 7,000. So how do we create our destiny? So there are lessons to be learned from everyone else when we come to technology. One of my key tasks in Switzerland was to build what's known as innovation bridges, to establish links between innovators, researchers in Switzerland or institutions over there with institutions back in India. I was very happy that sometime back a collaboration that we had helped establish between EPL in Lausanne and IIT Madras, Chennai on the Hyperloop has now reached its test phase. So that is an area, for instance, in which the Chinese have done remarkably well in mass transportation. But Hyperloop is something in which we are ahead of the Chinese, and there are many other things that we can be ahead of the Chinese as we should be. So I think we should be very open to learn from everywhere else, but have the confidence of our own.
Right, but let me just add to that. The Chinese are building the Hyperloop from Hangzhou to Shanghai. In fact, they built it, it's finished. They're going to launch it. And the second point is that the combined foreign exchange reserves of China and Hong Kong is more than 1.5 times the GDP of India. So I don't know what learning that gives us, but building a foreign exchange reserves helps in internationalization. Vaibhav, you want to add anything?
No, I fully agree. We have to be more. Chinese are a bit, this is again. I'm not speaking from finance or economics point of view, but as Sir was rightly mentioning about the culture, in their culture, it's okay to ask for their share, and in our scheme of things, we are just a bit more assertive, and we are saying that okay, we have come out of age, and now let us also play in that playing field. They are like, I want to play here now. This is part of this is mine also. So this is just a change in the approach on a civilization level or even on a political level. That does not mean that we cannot do what they are doing. Probably yes, they are a bit more aggressive. But like I said, other things are also equally important. Probably we will be having a more thought out, more laid out approach. But like I said, diplomacy and moral compass are something which probably we have in abundance, and probably I cannot say the same for our Chinese counterparts. Can be taken as my lack of knowledge also.
Also, I think it's an interesting point, so let me add to it, is that China crossed the size of the Japanese economy 15 years ago, and we'll be crossing Japan in this year, roughly speaking. So we seem to be 15 years behind China, and we need to accelerate to catch up. And there are multiple such statistical numbers which show that we are 15 years behind, and it doesn't seem to change. So we need to accelerate so that that change happens. But great question.
Thank you.
Could you pass the microphone to the gentleman behind you?
This question is to Vaibhav. The thing is like now SWIFT is getting not that much prominence, and due to the rising of Sharia banking, we cannot deny it. With 1.9 billion population, within a sovereign fund and within a kind of transactions and within a local conceptions over there, and it's a phenomenally growth. And I think in next 15 years they'll be in a prominence as well, and with the population thing tentatively around 2.4 billion. With that one, and how that will be enabler to internationalization of India currency, or like will that mean any challenge over there in the next?
So I will agree to this particular fact that Islamic banking is also on the rise. But as of now, I will first comment what is right now happening. The way the things are right now, at least in Indian market, still has the predominant share. The others are basically, you can say, all on the testing phase only. The second point is that that is the entire premise of internationalization of Rupee, is that we probably are moving aside from SWIFT, and then we are having our own bilateral kind of a relationship with let's say any particular GCC country or some other country, and we are relying on each other's assets or requirements, that we can serve you this. For example, let's say we can serve you rice or other kind of agri commodities. We can probably take crude from you, and we will use our currency to make that settlement. Correspondingly, like Sir said, sometimes if it works the other way around, to maintain our strong relationship in that region, so probably again this is more of a policy decision that we can also start dealing in their currencies to some extent. But again, it boils down to the fact that which country is more convincing, more capable in convincing the other country. But that's the entire premise of having other currencies also in the international mix, rather than just being United States dollars.
So my question to both of you, that there are certain concerns in doing the internalization of Rupee. The first thing is how to solve the problem of liquidity in international market for INR, so to get two-way quotes for different currencies. The second thing is, do you think that foreign currency reserves for India, and this question was just raised, is adequate with considering the gold reserves that we have, and China is increasing their gold reserve recently. And the third thing is, if you consider the CLS bank, Continuous Link Settlement Bank, there are 18 currencies are there. Unfortunately, our currency as well as RMB is not there in that. So, how to address this particular concerns?
So, as far as getting a quote for INR against any other currency, so basically, I will like to clarify here. The moment we talk about internationalization of rupee, that effectively means that we are now talking only about the rupee payment and rupee settlement. For example, right now, if you are making a payment in dollars and you are again getting things in dollars, then it does not matter what the exchange rate is. The only matter where it will be relevant is to identify the benchmark rate against their own home currency. So right now, that rate is available for pretty much every tradable currency in the world for rupee. So that should not exactly be the problem in terms of execution of this strategy which we are talking about, because as of now we are already doing it. Right? Ruble is not a very easy currency to get conversion quotes into, but yes, the benchmarking can be done and accordingly the values can be fixated for settlement. Sorry, what was your second question?
Or the CLS bank, because our currency is not there, the payment mechanism.
Yeah, I would like this question to be answered by Prof.
Ambassador, over to you.
Well, I think there were three aspects. One was liquidity, the second was the gold reserve, and the third was the international settlement. And so I think on liquidity, there's so much that has happened in the days that have just gone by. The very fact that we're having a discussion on internationalization of the rupee is so telling, because I remember when I was going out on my posting for the first time, I was moving to Hong Kong as a young foreign service officer. I remember the rupee at that time was valued at 7 rupees to a dollar, and we were allowed to draw a very princely amount of, I forget, maybe it was like $100 or something. And the whole reason why that was the case was because we didn't have foreign exchange. We had to pawn our gold reserves at one point of time, and when the finance minister had gone to Japan to meet with his counterpart to get a soft loan for a certain period of time, he was unable to meet the finance minister, and he met the Director General in the Finance Ministry. When I was posted in Japan some 15 years ago, that same Director General was very happy to meet me. And forget the foreign minister, the finance minister. So I think a lot has happened on the liquidity aspect, and I don't think that's a serious issue. The question of the reserve is also something that is a little more complex, and I wish Sachin was here because of his association with the Reserve Bank. I, for a long time, have maintained that the amount of reserves that you hold is not necessarily a value or an index of the strength of your currency. Just as we had found at one point of time, particularly after the gold standard was removed, that your gold reserves not necessarily a store of value. So your store of value is a level of confidence or trust that the rest of the global economy has in you. And today, for instance, the US dollar maintains its status as reserve currency, but at the same time, the amount of public debt that the US has is absolutely unbelievable. And if that were to happen in India, our rupee would probably have had to go through several rounds of depreciation or devaluation. So I think that those dynamics have changed, and essentially what has happened is that it's a function of trust and your level of integration in the global economy in this very globalized world. And so on that front again, I think we have done reasonably well, so I'm not concerned. In fact, I feel, and I wrote once, that we probably have a level of foreign exchange reserves which are way beyond what we need, and maybe these should be used for certain other very critical infrastructure, or they should be used to earn some revenue income. The third aspect that you mentioned about the settlements, this has been a big contention. We do have a permanent representation at the BIS in Basel, which is the Bank of International Settlements, and I used to visit them as well. But it is principally the Reserve Bank which is responsible over there. But we do campaign and lobby both in the World Bank and the IMF for much stronger representation, because the manner of financial governance that is happening today is somewhat discordant. So you would recall that there was a point of time when the G7 essentially dictated what financial norms, fiduciary norms, how financial rules would be determined, and then the G7 found that it was actually unable to do so. And it invited a group of outreach countries, as they used to call it in those days. And so there were 5 outreach countries that would be invited to the G7. In those days, sorry, it was G8 because the Russians were also part of it. So to the G8 plus 5. And we, for a very long period of time, were members of that outreach 5. Most of the others were not permanent members. China was still looked at with some suspicion in those days. I think the status of Dr. Manmohan Singh, who was the Prime Minister at that time, particularly on economic, financial issues, was very highly valued. And I remember particularly the G8 summit in Toyako in Japan. It was probably in 2008 when young Bush, the junior Bush, he told Dr. Manmohan Singh that they were thinking of having an expansion to G20. G20 had already happened with the finance ministers and the governors of the reserve banks, or the central banks as they call it. And they were discussing certain financial issues and new financial rules, but it was going to be taken to a summit level. And so in many ways, one of the key things that the G20 does is through the finance arm, which is to discuss issues of financial stability. That was the priority of the OECD countries. And when we came into G20, we changed the norms and the mandate and the agenda, because we moved from financial stability to financial stability and economic development, because for us, that was a priority. So in G20, that has already happened. But the extent to which it has transferred to the IMF and the World Bank and the BIS is not yet complete, which is why I think we are having this discussion and trying to see what are the options that we can create, what are the options that we can suggest, because at the end of the day, this will happen through a negotiation process. It's not that we will force something and everybody else will have to have it. It's got to have value. People have got to see advantage in it. So there will be a negotiation process. So it is important, and it's very good to be having this discussion, which should go to the policymakers, who will then take that up when they have the negotiations.
Thank you. We've almost run out of time. In fact, we've completely run out of time. But there's a question from Professor Gupte.
My question is to the ambassador. Sir, we understand that in terms of technology, in terms of economy, we are a lot behind China. But becoming an international currency, do you think there is a little more transparency which is required? And how does China fare on that part? Thank you.
I was in China when it overtook the Japanese as the third largest. And there was this great sense of euphoria over there. And they said that now we are going for global status and we'll be head to head with the Americans. And they used that power that they had gained to actually try and influence countries around the world through projects. They would set up projects with Chinese goods. Many of them were good, some of them were not good. They worked very hard in what is known as elite capture. They would capture the leadership. We see it in our neighborhood as well, where we have these examples. So the Chinese presence is very, very pervasive around the world. You cannot deny its existence. How it has happened, whether it is good or bad, is it dead trap
economics, those are other stories, because sometimes when you go to the grassroots and ask the people, they might have a different narrative. So in today's world, the way we have structured the Western-oriented rules-based system, transparency, governance are very important considerations. But for the Chinese, they look at it somewhat differently, because for them it is not necessary to be as transparent as the Western world demands or would like to be. They in fact sometimes criticize the so-called transparency of the Western world and say it is a convenient transparency that you put about. But what they also say is that the rules-based order, which looks at a certain form of governance, which includes transparency as an important element, is also very differently interpreted in China, because the value of the individual is not something that is sui generis. It is something that actually accrues from the value of the state, and therefore it comes down to you because the state has become great. And so if you want to make the state great, then maybe you don't need that kind of governance and transparency. So, I think the Chinese will follow what they do. And as I said earlier, I am happy that I'm not Chinese and I'm Indian. So I will follow the way we are, and we will constantly negotiate and argue for the kind of value systems that we are more comfortable with, which include transparency and governance.